Namaste. Good morning. Just my friend pointed out here. If I take the theory material in the main material, I will change it. If I take the theory material in page number 16, it should be 2 crores, not 5 crores, where the total income, including all income, exceeds 2 crores. And our friend needs an explanation. I'll let you know. I'll tell you this. Okay, imagine my business income is 2.2 crores and my special income, that is dividend, STCG on which STT paid, LTCG on which STT. Okay, special income which includes dividend is let us take some 40 lakhs. So 2.6 crores. This is taxable at a special rate. This is taxable at the normal or slab rates. And for this, surcharge will be 25%. For this will be 15%. Okay, that's what we have understood. Suppose my business income is 1.9 crores and my LTCG is 40 lakhs. So my total income is 2.3 crores. Now surcharge is only 15%. Now surcharge is only 15% because excluding this, it has not exceeded 2 crores. Including this, it has exceeded 2 crores. In which case, surcharge continues to be 15%. Okay, coming back to that explanation again, where the total income other than this income has exceeded 2 crores. On that 25%, 15% exceeded 5 crores. On that 37%, 25, 15%. Where including these things, it has exceeded 2 crores, not excluding, including, then the surcharge remains to be 15%. Then the surcharge remains to be 15%. That's what that wording means. We'll continue from yesterday, quickly wind up this remaining question. Okay, I'm still in individual for question 7 and 8 because dividend is there. I want you to understand. STCG under 111A, LTCG under 112A, dividend income, business income. So you can see, excluding these three things, it has exceeded 2 crores. It will be 25% surcharge, both under the optional regime and under the default tax regime. Let's start. It is also 15% on dividend income. It is also 15% on dividend income. We go by the concept. If 71 lakh 62,500 is for 2 crore 45 lakhs, what is for 35 lakhs? We find that out. On that we compute 15%. Keep copying. I'll do the other method also. Shall I? Shall I? This is what I get under default tax region. Do the last part alone, that will be more than sufficient. Other parts are the same. Am I clear to you? Am I clear to you? Okay, right. Online students, try out the eighth question, please. Try out the eighth question, please. You should give me the answer. Online students, you can text me the answer once you complete it, or you can WhatsApp me the answer, just the answer alone under the both system, but I want you to try. Try out the next question, please. This should be your answer for the previously normal tax regime, now the optional tax regime. 2 crore 4838, somewhere in 810. Okay. Under the default tax regime, this should be the answer. Are you getting it, Hari, Deepika, Hemanathan?
Yes, sir.
Are you clear? Are you clear? So keep it. Okay. I will again visit it when we come to assessment of individual. At that time, we'll do more questions on this. But as of now, this is how under, because when we do questions in PGBP or capital gains where we will do some questions, you need to understand how to compute the tax rates and other things. Keep it aside. We will continue to do the individuals. So going back to our theory material. Okay, going back to our theory material, I'm back to page 14. Okay, so AOP BOI is like individuals, the slab rates will be applicable for them. Firm, the normal tax rate is 30%. Right from rupee 1, it is taxable at 30%. Firm, right from rupee 1, it is taxable at 30%. Now, for cooperative societies, I think we will have question on cooperative society because of this amendment that took place. Okay. Now, for cooperative societies, the basic exemption limit is, okay, nil. The basic exemption limit is nil. The first 10,000 is taxable at 10%. The next 10,000 is taxable at 20%. Okay. So what we will say is amount exceeding 20,000 into 30% plus 3,000. Amount exceeding 20,000 into 30% plus 3,000. Okay. And they also have the default tax regime. Now I cannot call it as optional. They also have the default tax regime under 115 BAD, where their income is taxable at 22%. Okay, I will complete companies and come back to this amendment. I'll complete companies so that you will understand it. Tax rate for companies, remember, we should see the turnover of the financial year 21-22. We should see the financial year 21-22 turnover for determining the tax rate of 23-24. Repeating, financial year 23-24 tax rate depends upon the turnover of financial year 21-22, where audit and assessment would have been over. For the financial year 22-23, the audit would be over only by September, but you have two installments falling in June and September itself. So the law has safely played that look at the turnover of financial year 21-22 to determine if it has not exceeded 400, it is 25%. Where it exceeds, it is 30%. However, there are two sections which gives them the benefit. 115 BAB is only for manufacturing companies, which we will see later also. It should be after 2019. Actually, it is 1/10/2019 onwards, but as of now, that is not important for us. In this chapter, we will check it out. The business income is taxable at 15%, and any other income, which means IHP, okay, interest income, are all taxable at 22%. Special rates of taxation remains to be the same. STCG on which STT is paid 15%. LTCG on which STT is paid first to 1 lakh nil, balance 10%. Normal LTCG, winnings, all those things remain the same. This because there is always a confusion with the people's mind. If I go by 115 BAB, I am taxable at 15%. That's wrong. That's wrong interpretation. Your business income is taxable at 15%. Income from manufacturing activity is taxable at 15%. Any other income, it matches with 115 BAA for other entities. The alternative rate is 22%. 22%. Is the class clear? Okay, right. Same manner, this has been introduced. 115 BAE for cooperative societies engaged in manufacturing activity, 15% for the income from manufacturing. The other income will be taxable at 22%. Now, anybody following the default tax system has to pay 10% surcharge, irrespective of the level of income. Okay, normally surcharge for a company up to 1 crore nil, income exceeding 1 crore but less than 10 crores 7%, more than 10 crores 12%. But if you are falling under the default tax regime, your surcharge will be 10% even for these companies. Is the class clear? Okay. Read it once. Let's do some questions.
So income entity will be percentage.
Other than that, 22%. Yeah, you're right. May I move on? May I move on? I'm in the practical material, question number 9. I'm in the practical material, question number 9. The turnover of a domestic company is as follows. Financial year 2021, 21-22. This is the key factor for me. This is the key factor for me. 22-23. The business profit under income tax law is 6 crore. Compute the tax payable. We are doing the optional, that is the normal tax regime. Okay, right. Is this clear, friends? Is this clear? Okay, right. I will do the 11th question first. A new manufacturing company opts for 115 BAB. Okay, following the income details. Manufacturing activity which will be taxable at 15%. Other sources will continue to be taxable at 22%. Please remember, 115 BAB 15% is wrong actually. There are two rates in 115 BAB. Okay, 15% only for income or business income or income from manufacturing activity. Normal other incomes will be taxable at 22%. Irrespective of anything, surcharge is 10%. May I move on? Now I am going to 10th question. A cooperative society has a taxable income, compute both under normal and optional, assuming its main business is manufacturing and the income is earned from manufacturing operations. I will take it as a newly formed cooperative society so that I do the 15% rate for you, 115 BAE. Okay, my intention is 115 BAE, so I take it a newly formed cooperative society has a taxable income of 14,10,000. So that okay, please understand the slab rates of a cooperative society under the optional existing system is up to 10,000, 1,000, up to 20,000, 3,000, 1,000 plus 2,000. More than 20,000, it is going to be 30%, no surcharge. Whereas under the new system, under the default tax system, okay, we will be having surcharge of 10%. We will be having surcharge of 10%, but the rate is 15%. 115 BAE. If it is an already existing cooperative society, not a newly formed, it will be 22%. Okay, I can show both also. This you're clear, 436, 800. Okay, up to 20,000, 3,000, beyond that. Again, when we do cooperative society, we'll understand why this 20,000 limit, because they have a lot of exemption. Primary cooperative societies are exempt. Those which are serving only for members are going to be not exempt, deduction, 80 deduction they are going to claim. So that's why they enjoy this higher rate of only 20,000. Okay, I'll do both the things. You understanding? Okay. Any doubts was asked? Let me do the last part. That is, yesterday we were speaking about marginal relief. Okay. There is a passion and sentiment I carry. All chapters, last question, Taliban. Okay. That's always, okay. So once you reach Taliban, there is nothing more. That's my strategy. Okay. So, okay, let us understand this. I'm first doing case A. First understand this so that after that you can take down, you will, if you recollect it, it's fine. So income in the first case is 51 lakhs. Base tax will be 51 lakhs minus 10 lakhs into 30% plus 1,12,500. Okay. Surcharge at the rate of 10% because exceeding. Okay. So you can see, if I or you is an employee of the company, we will go and tell the company, I don't want the increment. By getting 1 lakh extra, I am paying a surcharge of, why will I go for the increment? Okay. So I would definitely go and tell, boss, I don't need the increment. If I am a businessman, if you and I are businessman, we will not make the last sales in March. Why to make the sales? Get the profit and pay more tax. Okay. So came the concept of marginal relief. Okay. Total of base tax plus surcharge is this much. Had I earned only 50 lakhs, had I earned only 50 lakhs, I would not have paid any surcharge and my tax would have been 1,3. For earning 1 lakh extra, I am paying a tax of 1,64,250 extra. For earning 1 lakh extra, I am paying 164,215. Difference in tax, difference in income minus difference in tax plus surcharge becomes marginal relief. Becomes marginal relief. So this is the marginal relief that I get. Okay. Net will be this, and then add HEC. Okay. There is another way people interpret it. That is, whatever is the tax at the previous level plus difference of income. Even this I will not accept. Okay. The entire 1 lakh goes off. The entire 1 lakh goes off plus 4% on 1 lakh, 1,04,000 goes off now. Okay. But still, this is the way in which marginal relief needs to be computed. Go ahead and write it down. Yeah, somebody is asking me.
Hi, sir. Sir, for marginal relief, we in yesterday's sum we calculated that up to 25,000 for 7 lakh. The same applicable to for normal marginal relief also.
No, 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 no. That is only for rebate. That is whatever we did is rebate under 87A. That is a very very smaller. That is only for default tax regime. This is marginal relief at a larger level for surcharge. Because of surcharge, I am paying more tax. For that only this is applicable. That 7 lakh yesterday, whatever marginal relief is only for rebate. Please keep it aside. That is very 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 smaller level.
Understood, sir. Sir, is there any cap for this marginal relief also? Normal one.
Actually, there is no cap. After, I think you should compute up to 2 lakhs, 2 lakh 10,000. After that, it will change. Suppose, for example, I make it as 52 lakhs. Okay, you can see that the margin, there is no marginal relief at all. There is no minus amount at all, because the tax I pay, the difference is okay. So somewhere around 51 lakh 70,000 etc. It will be so. So ideally you work out up to 2 lakhs and see whether the question is, if they purposefully give 51 lakhs, 1 crore 1 lakh, 2 crore 1 lakh, that means they are talking about marginal relief. They are testing you on marginal.
Understood, sir. It is given for paying the extra tax due to surcharge.
Yes, 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 yes. Only due to surcharge. Yeah.
Got it. Thank you, sir.
Case B, I am doing 1 crore 1 lakh, my dear friends. Still I am paying more. That's what I said. I am paying 1 lakh 4,000. No. Because whatever 1 lakh I received, had I received 50 lakhs, I would have paid only this much. Now, by receiving 1 lakh, I am paying 14 lakh 12,500, which is 1 lakh plus 4% of that 1 lakh, 1 lakh 4,000. Marginal relief should ideally be after HEC, but they are only giving for surcharge. My dear friends, going for 1 crore 1 lakh, surcharge will be 15% and 10%. How? The previous level is now 1 crore. The previous level is now 1 crore, my dear friends. Okay. So here the surcharge will be 15%. Here the surcharge will be 10%. And this is how the working goes.
சரி இதோட கேப் மட்டும் நம்மளால ஃபைண்ட் அவுட் பண்ண முடியுமா சார் லைக் வாட் பாயிண்ட் இட் பிகம் பாசிட்டிவ் தென் இட் வில்
Actually I'll tell you, cap find out பண்றதுக்கு people can you can keep on in an Excel, you can keep on changing this and find out. But I would always tell you that, boss, this cap depends upon whether it is normal rate of taxation. If at all there is a special rate of taxation of 20% or 10% or 15% comes, then the cap changes. So do not try to find out the cap. ஒரு 2 lakh 2,50,000 வரைக்கும் please find out in the examination. If the examiner gives you an income of which is very closer to your previous level, that means the examiner is testing on marginal relief.
Got it, sir.
Am I clear to you? Am I clear to you? Okay, right. Leaving the next C, D, E to you. Whenever you find time, just work out and see. Just work out and see. Okay, I will send you the answers if you want, without wasting classroom time, because it's the same way. Find out for the existing level, previous level, tax plus surcharge, tax. Okay, difference is considered as marginal relief, provided as marginal relief. Okay, because and again I will work out a marginal relief in assessment of individuals when we do some questions there. So this chapter basically I touched upon just to understand that when we do the other chapters you should know the rates. That's why I checked upon. Okay, especially when we do every chapter assessment of companies, we will do the tax of companies. At that time 3 types of taxes will come. We will work out the default tax regime, the optional tax regime, and 115 JB MAT. Okay, similarly for non-corporate entities, there is 115 JC, alternative minimum tax. We will work out all those things at the respective chapters. Okay, have this as general rate. Well, we are moving forward. As I told you, the first chapter is focus upon is profits, gains of business or profession. That's what we are going to start today. Okay, hopefully for 2 weeks we are going to do PGBP at its length. Okay, so that we become strong. Of course, PGBP is one chapter which will go till the last class, which will go to the last class. Okay, so let's start. Profits, gains of business or profession. Okay, friends, the heading itself has something to tell us. The heading itself has something to tell us. Profits and gains. Is there a difference between profit and gain? Is there a difference between profit and gain? Raja? Earning. I take that, but both are earnings.
Profit is on business, gain is on.
One-time activities, gain actually.
Yeah, very good. Yeah. As he was also saying, as our friend is, profit means surplus from a recurring activity. I keep doing it. When I sell stock, I don't say I get a gain. I say I get a profit because that is my repetitive activity. Whereas gain is from an isolated or rare activity. When I sell my land, when I sell jewelry, I call it as gain because I don't do it repeatedly. But remember, some gains are taxable in this chapter itself. We will very soon see. Even though it is a one-time activity, normally gains go to the next chapter called capital gains. But some gains are going to be taxable in this chapter itself, even though it is one time. Okay, very soon we are going to see something known as compensation. I will tell you again this. Profit, gain of business. What is business? The law says trade, commerce, manufacture. Trade, buying and selling. Commerce, all allied activities like banking, transportation, insurance, everything. Manufacture, conversion of raw material into finished product. Trade, commerce or manufacture, sometimes you try to do business and you drop it off. It might even be a one-time activity, but your intention is to carry it on as a business or any adventure or concern. Your intention is to carry it as a business. Any adventure or concern in the nature of trade, commerce, or manufacture is business. Am I clear to you? Profession is not explained by law. You know what is the definition of profession in our law? Profession includes vocation. Saying a profession. Profession includes vocation. What is profession?
Requires skill.
Which requires skill. Very good. Knowledge acquired through formal system of education. Number law. Okay. Lawyers, doctors. Knowledge acquired through formal system of education or income earned through exhibition of skill. Artists, musicians are all profession. Plumber, electrician, idella, they call it as vocation. Neither there is formal system nor இதுதான் skill set ன்னு define பண்ண முடியாது. So they are all known as vocation. They also come under this chapter. Not in our recent case law list, but always recent case laws is only evident or valid for your exam, but not from your recent. But I'll tell you the most famous case of vocation. What is the most famous case of vocation? Nada Pramod? What is the stunning case of vocation? What Premananda does is vocation. Okay, it is a stunning case under income tax law. Okay, any person who is preaching religion and gets contribution from his followers, it is known as vocation and it will be taxable under PGBP. They said it is a capital receipt, not taxable. Any Nityananda, sorry, Nityananda, he said it's a very famous case law, Nityananda case law, income tax law, vocation. He said it's a capital receipt, not taxable. They said no, boss. It is taxable. It is vocation. What you are calling on is vocation. I am spreading goodness. But are you receiving money? It is taxable under business or profession. The term vocation is wide. Profit, gains from business or profession, which includes vocation, is taxable in this chapter. We all to an extent can understand, but don't worry. PGBP. Trust me, there are only two sections which speaks about income. 28 and 41. Adili, you will understand 41 is deemed income. Supposed to be business income. So in turn, only section 28 speaks majorly about income. (30 to 37) speaks about expenditure. In fact, 38 is also included. 30 to 37, 38, it speaks about expenditure. 40 and 40A speaks about, okay, expenditure disallowed or not allowed as deduction. 43 is a support section. Actually, okay, don't just understand 43b. 43 is just a support. நம்மளுடைய PGBP definitions are there in 43. Many things will be there in 43. As the class goes by, you will understand. 44 is administrative provision. Both the presumptive computation is also administrative conveyance. So 44 is presumptive computation provision. Repeating, only 2 sections speaks about income. Close to 10 sections speaks about expenses, whether allowed or disallowed. 43 is a more of a support section. 43 is the section which tells how to treat foreign exchange. 43 is the section which is going to tell us what is block of asset. Okay, so 43 is a support section, and 44 consists of 2 parts in administration. One is books and audit, other is presumptive computation. Okay, but it is for administrative convenience. 44. I told you yesterday, I am repeating. If a provision walks into a particular section, there is a reason for it. There is a reason for it, because all sections has preamble and all sections has a reason, particular purpose. When you want to incorporate something, you will always go and incorporate it in that particular section, not write a new section for it. Am I clear to you? Okay, right. We are starting with section 28. What is treated as business income? Income arising to any person by way of PGBP, carried on by him at any time during the previous year. Carried on by him, okay, the business, profession or vocation should be carried on by him at any time during the previous year. He could have started in January, he could have started on March 30th also, but it should be carried on during the previous years. To tax an income under PGBP, business or profession should be carried on during the previous year. You all agree with me? Okay. Mr. G. Ramaswamy, he was an advocate. Okay, let us take, he was an advocate practicing in Supreme Court, okay, in 21-22. In 22-23, he was made as a judge by the court, by the government, so he can no more practice. He became a judge. In 23-24, he receives a fees from a client who he appeared in 21-22. He receives the fees in 23-24. Remember, all professionals account on cash basis. So 2 shocks are there for you. All professionals account. அதுவே உங்களுக்கு ஷாக்கிங்கா இருக்கும். Okay. Account only on cash basis. Account only on cash basis. Okay, all professionals account on cash basis. So now in 21-22, he would not have accounted for this fees because he received it only in, and he contended this fees is not taxable for me because I am not carrying on my business or profession in the financial year 23-24. He won the case. இந்த மாதிரி கேஸ் வின் பண்ணிட்டா இன்கம் டாக்ஸ்க்கு so they realized the mistake that we should not have used the word carried on during the previous year. That is the reason of 41 in income tax. Deemed income. Deemed income, the reason itself is, and then they said, bad debts recovered. Even if the business is discontinued, when the business was running, you claim the bad debts. Now the business is discontinued. Now that debtor comes and taps your door. Tappu patte sir. He pays you the money. Okay. Bad debts recovered. Even if the business is discontinued, this is taxable. Even if a profession, even if the assessee quits his profession, now receives the fees, it is taxable. Like this scientific research, so many things. Okay, exception to the rule that it should be carried on. Recovery, okay, sale of assets used for scientific research, we will see that in this. So, even though the law uses the term carried on during the previous year, idhe mari next chapter also we will study. Taxing capital gain, assets should have been transferred during the previous year. But there will be some exception. Even though it is not transferred during the previous year, it is taxable in the previous year. Okay. So all statements will always have exception because then we find the practical thing different. Okay. Am I clear to you? Right. Friends. I told you gain is also taxable. Gain is one time. All types of business compensations are taxable under PGBP. All types of business compensation are taxable under PGBP. I have to supply to our friend 1 lakh units per month. That is the contract between us. In a month, I am unable to supply that 1 lakh unit. I was able to supply only 60,000 units, 40,000 units. There is a compensation clause. She says, if you are not supplying me 1 lakh, because I started by manufacturing thinking you will supply me 1 lakh, where you have to compensate me. The compensation that I paid to her, for me it is a business expenditure, for her it is a business income, though it is one time. Okay. Any contract, any breach of contract or agency agreement, I appointed you as the agent of Chennai for my product for a period of 5 years. At the end of the 3rd year, I am cancelling the contract. I am revoking the contract. Now I have to pay him compensation. Please understand, my dear friends, any compensation paid, these are one time only, any compensation paid for cancellation of agency agreement, for contract breach of contract, or for termination of any managerial agreement will all be taxable under PGBP. For the receiver, this is taxable under PGBP. This is taxable under PGBP. Is the class clear? Is the class clear? Okay. In this, I'll go back to the first example that I have to supply to her a particular number of material. I'm unable to supply, so it is taxable under PGBP, the compensation I pay. Suppose the example is like this. I am supposed to supply her a machinery and install and keep it ready within 6 months. Due to reasons beyond my capacity, I took 9 months to install the machinery. She said within 6 months you should have installed. You are now taking 3 extra months, 9 months. So pay compensation for the 3 months that there is a delay. Is this income? Okay. Now the law said in Saurashtra Cements case, compensation paid which is directly linked to a capital asset, the compensation should be adjusted with the cost of the asset. This will not be income. This will not be income. It should be adjusted with the cost of the asset. This should be adjusted with the cost of the asset, though I go a little away and come back. Okay. I mean page number 24, the bottommost case law. Page number 24, the bottommost case law. Okay. These are whatever is there in our material are either landmark case law or recent case laws. Okay. Page number 24, the bottommost case law. Saurashtra Cements Limited. Liquidated damages received by a company from the supplier, okay, of plant for failure to supply within stipulated time, okay, held by Supreme Court. The compensation received is directly and intimately linked with the procurement of the asset. It is not a profit earning process. That is, it is not revenue in nature. The amount received is not in the ordinary course. Hence, it should be treated as capital receipt, and what we should do and adjust it with the cost of the asset. Sorry. Adjust it with the cost of the asset. Sorry. Did I? Okay. It should be adjusted with the cost of the asset. Remember that. Okay. Okay. So, normally compensation is a business income, but this is an exception. Okay. Non-compete fees. Either it will be taxable under capital gain or business or profession. What is non-compete fees? Don't quote for this tender. Don't participate in this particular process. Two companies entered into an agreement to collaboratively do one particular product and said where there is a breach or where they are breaking down, the other company will not carry on the activity for the next 3 years in this particular sector. Non-compete fees is always business. Professional மாத்திர இருந்தா it is capital gain. Otherwise, it is only taxable under business or profession. Am I clear to you? Okay. Third, income derived by any trade, okay, professional or similar services for services performed to their members. Example? Cooperative societies, I take that. Yeah, that's a one good example. Cooperative societies. Okay. Okay. One example that you are not telling me is ICAI. Because you also know they are not serving members. Parallel. Okay. See, yesterday we saw mutual concerns. received from members, incurred for the purpose of members, surplus available is distributed to other mutual concern. This CII, Confederation of Indian Industries, FICCI, okay, all these trade, professional association or similar associations, cooperative societies, for specific, they are also taxable under PGBP. Their income will also come under PGBP. All types of export incentives, sale of import entitlement license, cash compensatory support, customs duty drawback, excise duty drawback, all these things will be taxable under PGBP. It might even be one time. It is considered as business income. Am I so far clear? Am I so far clear? The value of any benefit, perquisite, whether convertible into money or not, arising from carrying on of business or profession, okay, is an income. The value of any benefit, perquisite, whether convertible into money or not, from business or profession. This we will keep on discussing all through the law in various places. First thing, perquisite is not for salaries alone. Perquisite is also available for business. He is my company's agent in Chennai. For achieving target, I am giving him a gold coin. The perquisite 194R வரைக்கும் வருது. Section 194R TDS on perquisite. Okay, are you understanding? It is a perquisite to him. For achieving target, I am taking him to a trip to Bangkok. He comes and tells the department, I have only two options. Ponu, pogama irukkum. I went and asked the company, sir, I am not coming for Bangkok. Will you pay me that compensation? Whatever is the charges. The company said, no, you have only one option. If you want, come to Bangkok. Otherwise, you can forego that. So only I went. Don't tax me. ஒரே ஒரு வார்த்தை தான் ஆட் பண்ணாங்க. Whether convertible into money, it is regarded as perquisite. I wish you don't go, but still, have you visited a doctor's cabin? Except him, everything is sponsored. From the coat to the tabletops to the writing pen to everything. We will talk about that when we come to that 37 section. All these things are taxable in their hands. Doctors taken on a travel by pharmaceutical companies, perquisite taxable in the hands of the doctor. A case was well argued by a lawyer. Apart from paying fees, the lawyer was also given a gift, perquisite. Very easy our example, very closer to our heart example. For the success of the movie Jailer, Sun Pictures gave car to Talaivar, Nelson, Anirudh. They are coming under the fair market value of the car is taxable under PGBP. Value of any benefit or perquisite, whether convertible into money or not. Na car vandam solindarna, whether convertible into money or not, arising from carrying on of business. For the businessman, it is an expenditure. For the receiver, it is a income. Okay, இதே எக்ஸாம்பிள் 194R கொடுத்திருந்தாங்க, இதே எக்ஸாம்பிள். Okay, so this is taxable. All types of perquisites are, yeah, go ahead with your question.
Sir, but generally in companies like this, gift are not grouped under other income in financials. Rather, it got capitalized as in the books of accounts as an asset. So
Yeah,
how will we bifurcate
you are talking about receiver. You are talking about receiver or the provider?
receiver.
Receiver. Okay. For it should be treated as income. Section 194R has now given a, when we do that, I will do it very detailed, where they have said, irrespective of whether it is a capital asset in the hands of the receiver or not, it should be, tax should be deducted at source by the payer, by the provider. So in that manner also it will treat, they will cross check it and treat it as income only.
So then it should not be capitalized as asset, rather it should be grouped under other income.
Other income, yes.
Got it.
Am I clear to you? Okay, right. Okay. We all know anything paid to a partner by a firm will be taxable in the hands of the partner as profit and gains of business or profession. Okay, anything paid by a firm to its partners. Okay, this is 40B or section irukku. We will deal with it when we do assessment of firm. But anything Cayman insurance policy, I will do it along with the section 37, where I have the circular which tells you how to treat this as income. Okay, any sum received under where the asset is demolished or destructed will be considered as income. Now I come to this, where stock is converted into capital asset, then fair market value on the date of conversion is income. Now this is the major change that happened. Asset converted into stock in trade, section 45 subsection 2, capital gains la taxable. Asset converted into stock in trade, section 45(2), capital gains la taxable. Stock in trade converted into asset. Sir, Vasant & Co is there, whose main business is dealing with fridge, all the consumer durable item. They are using some 10 furniture set for their own offers. Stock in trade converted into, now the law says, had you sold it to an external person, what price you would have sold it? Actually, this is brought for real estate business. See, Bros, Alacrity, they construct houses. ஒரு 10 ஹவுஸ் அவங்களே வச்சுக்கிறாங்க, ரீடைன் பண்ணிக்கிறாங்க. Stock in trade converted into capital asset. Had you sold it, okay, the entry you need to pass it, asset account debit to sales. Asset account debit to sales in the books, you have to pass the entry as if the capital asset. So conversion of stock into capital asset is transfer. Am I clear to you? Okay, right. Pramod, on doubt enna?
சார் ஸ்டாக்னா எனக்கு ஆல்ரெடி புக்ஸ்ல டெபிட் இருக்கும் சார்.
ஆமாப்பா, சேல்ஸ் மூலியமா அதை கிரெடிட் பண்ணுவாப்பா.
இல்ல சார், இப்போ நான் கேபிட்டல் அசெட்டா மாத்துறது தானே சார் சொல்றோம்.
ஆமாம்,
பட் கேபிட்டல் அசெட் டு ஸ்டாக்னு என்ட்ரி போட்டுட்டு P&L கிரெடிட் ஆகாததுனால ஐ ஜஸ்ட் ஆட் தி ஃபேர் வேல்யூ டு மை இன்கம் கம்ப்யூட்டேஷன் ஆன் கேக்குறேன்.
yeah, exactly. In your statement of income, you will add the difference between the cost and the fair market value.
ஓகே ஓகே. Thank you.
Yeah. Okay. Right, friends? Actually, our business is divided into three: speculative, specified, and others. The only reason is set of chapter. The only reason is set of chapter. Speculation loss cannot be set off against any income other than speculation profits. Same way specified business. Okay. So we will see that in set of chapter about it. But generally, where transactions are settled without actual delivery of goods. Where transactions are settled without actual delivery of goods, it is known as speculative business. You are not actually delivering, you are settling the transactions. Okay. There are three criteria to determine a transaction. Contract should be purchase or sale. Ultimately, the settlement would be otherwise than by actual delivery. The settlement will be otherwise than by actual delivery. Well, friends, parallelly, I want to also tell you there is something known as ICDS, Income Computation and Disclosure Standards. There are 10 ICDS for us. Okay. Very many sections, very many places you are going to see this. Books needs to be maintained. Okay, suppose I am doing a speculative business, non-speculative. For speculative business, books needs to be maintained separately. Have you so far seen income tax books? You have all seen books of account. அதுவும் இல்லைன்னு சொல்லிட்டாதீங்க. You have all seen books of account. என்ன பாரதி? Have you seen income tax books? Nobody has seen, right? I assure you, every one of you have seen. Huh? The statement of income we prepare is known as income tax books. The statement of income which we prepare is known as income tax books. Add depreciation charged in books, less depreciation as per IT law. So that depreciation is as per the books of accounts maintained for income tax purposes. In the statement of income we prepare Roman 1 salaries, Roman 2 house property. We segregate there. The business also, if there are more than one business, we segregate there. So, yes, there is something known as income tax books of accounts. Nothing but, Ipo Pramod was asking me that how do I conversion of stock into asset. Accounting does not tell you that you should record the profit. Only income tax law tells you that you should record a profit. Okay. So in my income tax statement, I will write add profit on conversion. That is a books of accounts. That is a books of accounts for me. And capital gains chapter or in the depreciation you will see, you can take that value as the asset purchase value and charge depreciation on that. Okay, so actually there is something known as income tax books, which is nothing but statement of accounts. Statement is there. In our accounting, we prepare notes on accounts, significant accounting policy. In income tax, do we prepare? The answer is yes. You are answering that in form 3CD. Your form 3CD is nothing but your statement, your disclosure standards. I have followed this method of accounting. They ask you a question, mercantile or cash basis. I have followed mercantile basis of accounting. They ask you a question, how you have valued your stock. You are doing it in your annual accounts also. Okay, so the same principle here, disclosure happens in form 3CD. Okay, ICDS, income computation and disclosure standards. There are 10 standards which are released. We will study that separately, but one of the standard I want to talk about is subsidy, or what is popularly known as government grant. Subsidy or government grant. Okay, our income tax law in ICDS divides this into 3, where subsidy is received towards a depreciable asset, non-depreciable asset, directly you can say it as land, other subsidies. If you start your industry in a backward area, Gujarat government gives you a subsidy. Our okay, AS12 dana government grant, okay, says that everything should be adjusted with the cost of the asset, reduce the asset value, whatever be the asset, and if it is other subsidy, treat it as capital receipt, government contribution, promoters contribution, and take it. Ana income tax law they have a different treatment. Where it is towards a depreciable asset, you should adjust it with the cost of the asset. Where it is towards a non-depreciable asset or other, it should be treated as income. Subsidy received for land should be treated as income. Promoters subsidy, promoters contribution, government giving subsidy for starting in a rural area, all these things will be regarded as income under income tax law. Only subsidy towards a depreciable asset, you should adjust it with the cost of the asset, and on the net amount you will be charging the depreciation. Am I clear to you? Okay, this again is a treatment in ICDS which we will make it in our income tax adjustment statement. In the accounting, you would have followed AS12 and accounted for it, but here it will be different. Okay, where subsidy is towards a depreciable asset, same should be adjusted with the cost of the asset. Non-depreciable asset, income. General subsidy, it should be treated as income. Subsidy will be treated as income either in the year it becomes due, that is all conditions are fulfilled, or in the year in which it is received, whichever is earlier. So once you have received it, treat it as income. Accounting does not say so. Accounting says only if you get the right to receive, all conditions fulfilled, you can record the subsidy. Income tax law, once you have received it, it should be treated as income. The deferment cannot be beyond the year of receipt. Am I clear to you? Okay, okay.
Hello.
Listening.
Yes, sir. Sir, இப்போ வந்து அந்த condition satisfied பண்ணலன்னா இந்த accounting book we used to defer grant, we create liability and assets against income over the period of time. But income tax act
it is income. Even if you are not satisfied, it is income.
Okay, on the year of due or receipt recovery credit.
Yes, sir.
So on the difference நம்ம deferred tax books account பண்றோம்.
அது எனக்கு அக்கவுண்ட்ஸ் பெருசா தெரியாதுடா ராஜா, மன்னிச்சுடு. ஓகே,
Got it.
nothing, but yeah, you will take it as deferred tax or permanent adjustment or temporary adjustment, however it is. But in income tax, once you receive it, it is an income, or once it is due, it is an income.
Got it. Thank you.
Thank you. Okay, right. So do you know this organization called Oyo Homes? What they do? Renting out of apartments, service apartments or something like that. Is the rental income business income or IHP? How do you say business income? It is their core business activity. Okay, stay on with that idea. TVI Homes, which construct some 100 apartments, and 10 apartments they are unable to sell. They let it out. They are unable to sell, they are letting it out. Is it IHP or business income? It is IHP. Why? It is treated as capital asset. Angiyo the capital asset than Oyo Homes ku. Why?
Like, they do not own the premises.
Okay, if they suppose they own, you have a different answer for that. Yeah.
Intention is to sell, not to rent out.
Yeah, I take those two answers. We will first see why this problem. If I tax them in IHP, they can claim only two deduction. 30% standard deduction and interest on borrowings. No other deduction you can claim. Whereas they incur lot of expenditures. Office நடத்துறாங்க, staffs இருக்காங்க, salaries இருக்கு. So this is a problem which went on for a longer time. I take her answer. The first answer, Supreme Court has once for all settled this problem by saying what is their main business. TVI Homes, the main business is not letting out. The main business is constructing houses and selling houses. Those properties which they are unable to sell, they let it out. They are letting out some stock in trade. That is taxable only under IHP because their main business is. Whereas Oyo Homes, their main business is letting it out. Okay. Main business ne eppadi kandupidipinga? Articles of association, memorandum of association or partnership deed. People put everything as main business. So, Supreme Court gave two things as important. It should be the main business and primary source of revenue. If I look at your P&L account, the income should primarily come from this activity. Because for TVI Homes to add this as a main business, it will not take any time. But that will not be their primary activity. Okay. This is the judgment of the stunning case law of Chennai Properties and Investments Limited. Chennai Properties and Investments Limited. Assessee had the main object of acquiring properties and letting it out. The rental income is shown as business income in the return file. AO treated it as house property. Held by the Supreme Court, the main object of the company is to acquire, hold and let them out. The total income earned by the company is from that activity. When it is the main object and the income is also earned from such object, it should be treated as business or profession. From this case, we infer two things. The object clause or the business clause should specify this as main business and substantial portion of the revenue should come from that. Then only it will be treated as PGBP. Both conditions should be fulfilled. Is the clause clear? Okay, is the class clear? This case law sealed lot of things. So came the Rayala case law also, which has the same principles, and for which also they said, look at Chennai Properties case where the judgment is clearly given. Raj Tadkar, wait பண்ணுங்க, நான் வரேன். New Delhi hotels. Rental income of unsold flats which are held as stock in trade. This is not business or profession, because your main business is selling houses. Unsold houses, you have let it out. Okay, held by that this should be taxable under IHP and not PGBP. Am I clear so far? Okay, so came the NDR warehousing case also, which also had the same fact. Or warehouse irukku, where people come and store, and the rent received will be business income, will be treated as business income, because my main business is warehousing. Just because there is a roof dome, the object class had warehousing and related service as a main business. Further, the assessee is not just performing warehouse alone doing ancillary. The consideration cannot be treated to warehouse. Hence, the income derived is taxable under PGBP and not IHP. Am I clear to you? Okay. Shall I, sir? No. I told you, towards a non-depreciable asset and other, it will be treated as income. The government is unable to give subsidy, so they issued bonds. Instead of subsidy, they issued bonds. I sold that bonds and incurred a loss. Is it business loss or capital loss? Is it a business loss or coming under capital gains?
Business loss.
Why?
Purpose for which the amounts are issued for the
Is only in lieu of subsidy only they have issued. Do you understand, friends? In lieu of subsidy only they have issued. Gujarat State Fertilizer and Chemicals Limited. Sale of fertilizer at a lower rate as the government provides subsidy. Due to cash crunch, the government gave subsidy in the form of fertilizer bonds. Assessee sold the bonds at a loss and claimed it as a business loss, whereas AO said this is a capital loss. No. Since subsidy is a business income, sale of bond which is provided in lieu of subsidy, instead of subsidy, will be treated as business income only, and the loss will be considered as business loss only. Am I clear? Okay. Now, deposits, or I can classify deposits into two. Basically, I have surplus funds, so I have kept it deposited in the bank. Okay. I want a guarantee, sir, to be given to my customer. I want a guarantee to be given to my customer. I approach the bank. Bank says, pay me margin money. That is, keep deposited a margin money so that I will issue guarantee. Repeating, here bank says, unless I keep the deposit, I will not get the guarantee. Unless I get the guarantee, I will not get the business. Because customer will give me only on the basis of guarantee, and then for that obtaining that guarantee, I need to keep my money deposited. In the surplus illa. So came a case law of K and Co, where they made it that if the deposit is interlinked to your business, the interest will be business income. Where the deposit is a surplus, the interest will be IFOS. Okay, the brought forward loss of use of, because once you bring forward any business loss, it can be set off only against business income, not against IFOS or something like that. So in K and Co, they said, what purpose you deposited? Is the deposit interlinked to your business for obtaining business contracts? Then it should be treated as business income. If the deposit is only the surplus, then it should be taxable under other sources. I ask you to stay here and talk about one more case law, which is also very interesting. Company laws say share application money should be kept in a separate bank account until shares are allotted. Correct? Okay, right? Is that your option, sir? You want to keep it deposited? You are under a legal obligation to keep the money deposited in a separate bank account. Given an option to you, you would have used it for your business, or you would have kept it deposited, or you have invested in some other, but you don't have that option at all. In Rama Multitech case, it was held that it is an obligation like margin money. It should be treated as business income. Any share issue expenses adjusted with that. If it is surplus only, it should be taken as okay. Interest income from share application money deposited in a separate bank account. The assessee company is statutorily required to keep the application money in a separate bank account, and the interest earned is directly linked with raising of capital. Hence, it is taxable under PGBP, and any expenses against that can be set it off. It is not IFOS, because if it is IFOS, only two charges are allowed: collection charges and loan interest paid on loan taken for investment. This is allowed against the interest income. But if you take it as business, you can claim all the other expenditure also. K and Co. Interest income on margin money deposited with bank for obtaining bank guarantee, held that margin money was an essential element for obtaining the bank guarantee, which is necessary, and there is a direct link. Hence, the interest received is taxable under PGBP. Please read the case law once. Chennai Properties repeatedly questioned. K and Co. popular question in one of the adjustments. Okay, K and Co. is a popular question. Please read it, and Saurashtra also. Please read it. Okay. Our material will consist of case laws like this only. When you look into the e-copy of the material later, when you will understand that Supreme Court case laws will have a different color. Okay, so that later you can concentrate. கடைசியா case laws-லாம் தனியா எடுத்து கூட I'll give it to you as a book so that you can be clear. ஓகே, இதெல்லாம் அநியாயம் பாரதி. உனக்கு வேணா உன் ஏசியை நீ இது பண்ணிக்கலாம், இந்த ஏசியை நீ கொஞ்சம் குளிர்ட்ட சார் உங்களுக்கு. ஓகே, ஹோண்டா சீல் வெயிட் அது வேற ஒரு இடத்துல லிங்க் பண்றேன் அந்த கேஸ். The next case, this case law, I know I will link it up with some other thing so that you will be more clear. Okay, right? That is section 28. That is income. What will constitute income? Example, what type of questions from income? எல்லாமே adjustment தான். Subsidy can be an adjustment. K and Co case law can be an adjustment. Okay. The Rama Multi-Tech can be an adjustment. Chennai properties can be a case law question itself. Okay. In assessment of companies, we will see a question where Chennai properties is easily used. That is, the main business is this and they have received a rental income. How to treat it, you will understand it. Shall I proceed? That is section 28 with its case law. 29 is just a section which tells how to compute business income. 29 is a section which tells business income means revenue minus allowable expenses. Revenue minus allowable expenses. That's what this section says. Okay, it is revenue minus allowable expenses. Allowable expenses are divided into 3. Expressly allowed by law. Law says yes, you can claim. Expressly disallowed by law. Law says no, you cannot claim it as a deduction. Allowed only on the basis of actual payment. Allowed only on the basis of actual payment. And the allowed only on the basis of actual payment 43B lada one amendment which might be the questionable for some more attempts is that MSME. They have to be paid within 45 days. Okay, so that amendment is there. We will check that amendment later. So this is okay. So expenses expressly allowed is 30 to 37. Is 30 to 37. Now I again want you to understand 30 to 37. Idhula 30, 31 and 32 are asset-based deduction. Asset-based deduction. 33 is deposit-based deduction. If you keep the money deposited, you will get the deduction. 35 is asset itself as a deduction. Asset itself as a deduction. 36 others. 37 general. Okay. 30, 31, 32 are asset-based. I given an option, I will make 30, 31 go here, either to 36 or 37, because the two are very, very small sections, doesn't need a separate provision for it, but generally. Okay, okay. What is section 30? Please understand. Expenses in relation to building. What are all the expenses allowed in relation to a building? Rent. If I am getting the house or if I am getting my office on lease from somebody and you are renting my office, rent. If I am owning it, maintenance. Current repairs, repairs of revenue nature, current repairs, municipal taxes, insurance will all be allowed as deduction. 30 is expenses in relation to building, rent, repairs, municipal taxes, insurance will all be allowed as deduction. 31 is the same thing for plant, machinery and furniture. Higher charges, repairs, current repairs, those which are not of capital nature, current repairs, insurance will all be allowed as deduction. This is section 30 and 31. Okay, as I told you, very small sections, you forget it. It is directly allowed. Okay. 32 is the mother of all sections in income tax law, which is the lengthiest of the discussion. Hopefully, we will complete the entire discussion by Friday or 1 hour. So you can see, or 5 hours of discussion is there in depreciation. Reduction in the value of asset due to its usage, change in technology and lapse of time is what is depreciation. Under income tax law, the following conditions should be satisfied for claiming depreciation. It should be a specified asset. Directly I can come and tell you, two assets are not specified assets. Land, goodwill. No more you can claim depreciation on goodwill, even if it is purchased goodwill. In amalgamation, you do a purchased goodwill entry. Even if it is a purchased goodwill, you cannot. Okay, there are two assets which are not specified assets. Otherwise, the specified assets include building. All type of construction is known as building. Building need not have a roof. Even fencing will be treated as building. Even well will be treated as building. Even statues will be treated as building. All type of construction will be treated as building. Am I clear to you? Okay, building is a specified asset. Machinery is a specified asset. What is machinery? Any process equipment that is used for converting raw material into finished product is machinery. Any process equipment that is used for converting into finished product is machinery, for which you can claim depreciation. Machinery is allowable, specified asset. Plant is a specified asset. Abdina? Huh? Plant. What is plant? Boilers. Good. Okay. Right. Intention, explanation. Normally, plant தான் சொன்னான். Boilers, transformers, pipelines, இதெல்லாம் directly not used for manufacture, directly not used in the conversion of raw material into finished product. Pollution control towers. ஆனா இதெல்லாம் இல்லாம business பண்ண முடியாது. Without the water pipes, without the boilers, without the transformers, without pollution control tower, that which is very essential, without which your business cannot be performed, is plant. That which is very essential, without which your business cannot be performed, is in the explanation nikal. Anand Theatre. There was a theatre by name Anand Theatre near Gemini flyover long back. They said our theatre building is a plant. because plant enjoys higher depreciation. Remember that, which is very essential, without which where will I project? Chola Sheraton said our hotel building is a plant, without which everybody has to stay in Nungabakamai Road. சரி, definition தப்பா போயிடுது. Let income tax law itself define plant. That is the worst mistake we did. Okay, I told you here what is the support section. What is the support section? 43. They were asked to define plant. அநியாயம் பண்ணிட்டாங்க. She was telling no. Computer is a plant. அது கூட பரவாயில்ல சார். Car is a plant. Air conditioner is a plant. Tube light is a plant. Fan is a plant. Residue ஆக்கிட்டாங்க அது. So what are we now doing? We are now making one change. Why to call it two different assets? Say it as plant and machinery. Sir, actually plant to machinery சம்பந்தமே இல்லை சார். Machinery is separate, plant is separate. We are unable to define plant. So we boiled it down to, so now section 43 says plant includes ships, vehicles, books, scientific apparatus, computers, electrical fitting, electronic items, surgical equipment. Doctor stethoscope is plant. Ama. Okay, because there is no proper definition, we resorted to our own definition. Furnitures, intangibles. Intangibles are know-how, patent, copyright, trademark and agreements. However, goodwill is not a specified asset and depreciation cannot be claimed on goodwill.
Hello.
Listening, Hari.
Yes, sir. Sir, practically, how we distinguish between plant and machinery and furniture? Sir, for example, printer. We have to refer case now for that.
Yes, Raja. Printer is an electronic item. It is not a decorative item.
Okay.
Yeah. Okay. I feel very chill. Okay. Now going forward. So let's not worry about, even in exam that's not a question. So plant and machinery, we all know. It should be owned by the assessee. Abdina? Only the owner of the asset can claim depreciation. Only the owner of the asset can claim depreciation. If there is a lease transaction, only the lessor can claim the benefit of depreciation. Hire purchase, yeah, hire vendor, hire purchaser can claim because the ownership gets transferred. But only the lessor can claim depreciation in the case of a lease transaction.
Financial lease. Finance lease.
Sir, there is accounts list, tax. Now, sir, I tell you, tax or a preamble irukku, sir. Accounting does not matter. Okay. Now coming back. Friends, I purchase an asset. Okay. I'm a businessman. I purchase an asset using business funds. But for sentimental reasons, I am registering it in some other person's name. It is I who fund it, the business which funds it, it is the business which uses it. But when I look into the ownership document, I find some other person as the owner. Can I claim depreciation? Motor vehicles law says I am not ready to register under artificial person's name. Natural person ஒருத்தரோட நேம் இருக்கணும். We all know firm is not a recognized entity in many places. Can a firm become shareholder? No. The partners can together become shareholders, joint holders, but the firm cannot become shareholder. Similarly, a firm cannot buy a car. It will be bought in the name of partners. Can the firm claim depreciation? So came this concept called beneficial ownership. It is not who the owner is, it is who is getting the benefit out of it. That person can claim depreciation. Where it is funded by a person, benefited, used by a person, for registration sake you have made it in some other name, they can claim the depreciation. In order to claim benefit or asset should be ownership. Okay. The term ownership also includes beneficial ownership. The term ownership also includes beneficial ownership. Am I clear to you? It also includes beneficial ownership. So it should be owned by the assessee. To claim depreciation, it should be used for the purpose of business or profession of the assessee. Abdina?
Not individual person.
No, that's as simple as that. Don't use it for domestic purposes and claim depreciation. Here, do okay. Simple, very simple, straightforward. Trust me, idla da nariya case la. It should be used for the purpose of business or profession. A temple was constructed inside the factory gate. In every factory, you can see that. A statue of the founder was there inside the factory, inside the office. இது இல்லைன்னா business நடக்காதா? So, assessing officer says it is not used for your purpose of your business or profession. Law says it should be used. So, I will not give depreciation. You have all studied in some college or schools, and you are going to various offices. There is a bank inside the college. There is a canteen inside office. Yes, sir. Canteen lena business nadakada. For that portion of building, assessing officer say, why should I give depreciation? It is not that portion of your building is not used for the purpose of your. Supreme Court said, wait. Usage can be active or passive. Supportive usage nu one irukku. Canteen, bank inside college, a temple inside the factory or a puja, and these motivates the employees. The statue of the founder motivates the employees. I can also become like him is a motivation. If he himself can become like that, why can't I is also a motivation. Okay. Motivates. So, passive usage. In the statement, ரெண்டா படிக்கணும். It should be used for the purpose of business or profession. Sir, I have a spare machinery. If my main machinery goes out of order, I will use my spare machinery. Last year, full year, my main machinery was running in good condition. I was not using my spare machinery. So the assessing officer said no depreciation for spare machinery. Is the assessing officer correct? Why?
No, sir.
Passive usage. It is ready. Anytime I can use it. ரொம்ப கஷ்டமான ஒரு இன்னொரு எக்ஸாம்பிள் தான், மனசை தேத்தின்னு கேட்கலாம். Okay, it's very difficult to digest, I understand. A generator is there with the office. Last year there was no power cut. Does that mean I will not give depreciation for generator? Passive usage. It is ready to use. Anytime I can use it. Usage can be active as well as passive. Okay? Okay? My dear friends, understand this case. This is again a stunning case. I am a leasing company. He wants vehicle. So, I say, okay, you have to pay lease rent to me for the vehicle. We enter into an agreement and I purchase the vehicle in his name, because after 10 years, after 7 years, he has the right. He can say, whatever is the residual value, I'll pay and take the vehicle, which is what majority of the people do. So, I register the vehicle in his name and I give it to him for usage. He is paying me lease rent. If he is not paying the lease rent, I can go and repossess the asset. I can anytime inspect the asset, whether it is in good condition or not. I claimed depreciation. Income tax officer said, stop. According to title deeds, he seemed to be the owner of the asset. So, second, he only uses the asset. You are not using the asset at all. So, you cannot claim depreciation. Case went to court. Supreme Court made a stunning judgment. One of the things the Supreme Court said is, what are you talking? By giving the asset to him, he is using. Using na, என்னுடைய business என்ன? By making you use my asset. My business itself is, as he is saying, leasing. Where is the question of I should only run the lorry? By the lessor, by giving the asset to the lessee, asking the lessee to use the asset, he is using it for his business. Number 2, the principle of substance over form. Registration is just a formality. Ana, I retain the right. of inspecting repossession. So it is I, the owner of the asset, and I am only using the asset by making in இன்னொரு லாஜிக்ல பார்க்கலாம். Can he claim both lease rent and depreciation? So I can only claim the benefit of depreciation. Came the judgment in a case called ICDS Limited, which is a leasing company. Okay, I'm there in page number 37. I'm there in page number 37. ICDS, assessee company as the main object of leasing. The company purchased vehicle leased out to its customer. Physical possession was with customer. Lessees were the registered owner. AO denied depreciation, that neither there is a usage nor ownership. Supreme Court held the main object of the company is leasing. By giving the vehicle on lease, the company is said to be using it for the purpose of business. Repossession clause and right to inspect clearly gives the overall beneficial owner to the assessee. Since it is satisfied, depreciation can be claimed by the assessee. Can be claimed by the assessee. Am I clear to you? Okay. With this case law, we stop here. We continue day after tomorrow morning on block of asset concept. All the best, friends.